All right, let's give it a moment before we begin. I'm still setting things up. Okay. Okay, give me a moment. Okay, let me turn on the chat for everyone. Okay, hello, everyone. I just sent the message to the chat. Okay, let me open the share it. Okay. Okay, welcome, Isilamayat. Hey, hi there, hi there. Hey, give me a moment. I'm still setting things up. Okay, I do apologize for the wait. Okay. Right, we are live. Okay. Right, welcome to another, trading strategy brought to you by Vantage Markets. So today it will be a masterclass educational session, 2 out of 3. So it will be on the day and swing strategies. Day and swing trading. So it's brought to you by, my name is Chen Yongjing. And I got to read the disclaimer first before we begin. So the information, context, or opinions expressed in this presentation and on the following slides are solely those of the presenter, which is myself, and not necessarily those of Vantage. And they are solely used for educational purposes and do not constitute investment advice or consultation on how a client should trade. So Vantage does not guarantee the accuracy or reliability of the information provided. Okay, so attendees should note that the sessions are audio recorded and may be published in various media, including print, audio, and video formats without further notice. So just a quick introduction to myself. My name is Chen Yongjing, and I've been trading for quite a few years now. I think it's coming close to 4 years. So I'm actually from Everest Fortune Group. So you can see my name. I'm actually on the left side. I'm Chen Yongjing, and I'm the prop trader. We also have the chief trader, Desmond Leong, and our fundamentalist, which is Jin Dao. And he's also a prop trader. So you guys might see him around. He's actually a very, very good trader. He has been trading a very, very big fund, multi-million-dollar Forex fund that he's actually managing. So this guy is the real deal. He's a very, very big deal. So right now we actually have a special collaboration with Vantage where we are bringing you guys the good stuff. So before I begin, I just got to show you the Vantage website. So if you want to find future webinars, educational materials like this to hopefully improve your trading, improve your trading experience, have a better portfolio, please go under education and tools, education webinars, and you can sign up. Like today, it's Tuesday. You can find out what is the topic, and tomorrow, Wednesday, we have a New York live trading session. Thursday, Friday, Saturday. So you can actually see the timetable on what is coming up next. So I'll send the link to the chat. So you can actually view it from there and sign up from there. And we are also live on YouTube. So if you guys are on YouTube, please say hi. Hello, guys. All right. So let us not waste any more time and move on to the presentation. So we actually have a few topics today that we are going to cover. So what is day trading, swing trading, how much time do you need for day trading and swing trading, and the ideal leverage to have, how much capital do you need to begin, and I'll show you guys one powerful day trading strategy, one powerful swing trading strategy. So far, how are your trading experiences? How long have you guys been trading? So you guys got to let me know in chat whether you are beginner, intermediate, or advanced trader. The reason being, so I can tune to you guys, tune to you guys' experience. So if you are trading for 1 month or 2 months, I will just simplify it, try to make it as beginner friendly as possible. So just let me know down in the chat, how long have you guys been trading? Oh, intermediate? Nice, nice. So how long have you been trading for? Isilamiat Ajayi? How long have you been trading? And also, do let me know your what kind of trading strategy do you use? Okay, so for me personally, I actually use something called smart money concepts. So it's actually essentially supply and demand and looking at liquidity. Okay, let us begin. Day and swing trading. So for day trading, which is me, what I usually do, I enter and close my trades within the day. Well, instead of sometimes within the day, I actually close out my trades within the hour or even up to 20 minutes or 10 minutes and I close out my trade already because I'm a scalper, a day trader scalper, and I only focus on the New York or the London session. So anything out of this timing, I will not trade, I will focus. I got my own hobbies, I'll exercise, learn new stuff, many things to do. I'm not a slave to the market staring at the chart 24/7 a day. All right. Hey, that's very, very good. 2 years. You are doing swing trading. Well, swing trading actually helps a lot with psychology. So you do not care what happens on the 5 minutes, 1 minute, or even the 15-minute chart. You just open a trade and let it run solely on the larger time frame. And it also gives you more time to plan out your trades, set an alert when the trade hits, when you can plan out on a larger time frame, when your point of interest is hit, you start to look for your entry. So it's much slower, but really, really helps with psychology. Okay, what kind of trading strategy do you use? Is Isilamiat? So we are actually a lot more reliant on technical analysis rather than fundamental analysis. So for swing traders who go by days and weeks or even months, their positions are open. They focus a lot on fundamentals. They are fundamentally driven. They read a lot about the USD, the DXY, what is Fed Powell going to announce, everything they have to digest and have to know what is going on, especially interest rates and especially housing permits, all this kind of stuff, CPI, PPI, is very, very important for swing traders. So for day trading, we typically trade on the H1 time frame, M15 time frame, and even the 5 minutes or the 1 minute time frame. For me personally, I'm always on the 1 minute time frame. I'm always there looking very, very closely at the charts. 1 minute just to find a solid, exact, and precise entry. I always look for precise entry, being said, every single pip counts a lot to me. So for scalpers, we actually accumulate a lot of small profits, adding up a little bit by a little bit. So we also, of course, capping losses, setting stop loss. This is definitely common sense to set stop loss. So it's accumulation of small profits. What do I mean by that? So instead of grabbing the entire piece of the pie, grabbing everything at once, hopefully making a quick and big buck, we actually go for small slices of the pie, grabbing bits and pieces and even crumbs of the entire market, a billion-dollar market, grabbing just a little bit just to feed our pocket. So all these little crumbs add up. Hopefully we can build a slice of a pie or even the entire pie just by accumulating very, very small profits. So we focus a lot on the small price movements. So for me as a scalper, if it moves 5 to 10 pips, it's a lot already. 10 to 20 pips is massive for a scalper. Typically, my trades run from 5 to 20 pips, and that is when I close out my trade. I do not hold longer than that. So if I'm holding longer than that, so maybe above 20, 30 pips, I would consider it a intraday trading. So I open in the afternoon, slowly monitor my trade throughout the day, through the London, through the New York session before I close out before the end of the day. Scalpers, less than an hour or 2 hours before we close out our trade. So let's take a look at this next. So that's how we define our, wait, let me find this. check day trading. So that's how we draw it out. This is just a very, very simple analysis. We mark out the Friday session, the Monday, Tuesday, Wednesday, Thursday. So we are looking at the difference between the multiple days, what is going on, and then we can simply mark out the very, very basic, classic supports and resistance areas. So in this example, we have already shown, you actually draw out. So it's actually not that exact, so I'll just use this. So we are looking for, this can be our support. This could be our next support area that price actually reflected off. And this is the pivot point, which is the lowest points, the lowest support, or you can call it the third support area. Hey, Trung. Hey, hi there. Haven't seen you for a while. Hey, by the way, Happy New Year to you guys. Is Ramat and Trung. So I opened the chat already. You guys can chat there. Okay, so same thing, support, resistance. So coming on towards swing trading, which Ramat Ajayi is actually doing. So you're actually holding a trade for a few days to weeks. I actually do know someone who is actually older than me by, I think, 3 years. He's actually a swing trader. He holds his trades for months before he closes out. So he was a very, very good trader. So he's actually using a live account. It's not a demo account. So normally when you look at Instagram, you start to see, wow, somebody is doing a $100,000 profit, $200,000 profit. It looks like a demo. It looks very, very shady. It looks like they are trying to sell you a Forex guru lifestyle, right? Then selling you a mentorship. But for that guy, I actually looked at his account. He's actually using a live account and it was really, really big. He actually held the trade for 2 months and he was up 500,000 US dollars on one single trade. So it was massive. It was a 100 lot entry. So swing trading focuses, it's actually a combination of technical analysis. So not that much of technical analysis, more and very, very heavy on fundamental analysis. You have to keep up to date on news events, what is going on, do write it down, do read it and digest it instead of going on to Telegram channels to find signals for swing setups. Understand exactly what the fundamentals are. And you also got to understand the housing permits. Later, I'll explain to you guys why the housing permits are very, very important for the US dollar. So it only applies to the United States dollar. Okay, swing trading is maybe best suited. Trung actually said swing trading is maybe best suited to high volatility assets, right? But it's riskier to master. Well, swing trading, you can actually do it on go. So a lot of my friends in real life, they actually do a lot of fun. They are very, very heavy on fundamentals for gold. So they trade XAU USD. So I send to chat XAU USD. And yeah, it's kind of riskier to master because fundamentals can change anytime. A major news event can easily reverse your trade. So a very, very big example is the Ukraine and the Russian war that happened. So this is not my friend. It was a close friend's friend. So it's quite far away. So during the Russian-Ukraine war, gold actually shot up very, very high. So you can actually call it a swing setup. You can actually bank on it. A war happened, especially such a large country like Russia. He actually banked on gold rising. So within the same day of the war starting, he actually made 100,000 US dollars just by banking on fundamentals. So you bank on fundamentals instead of technical analysis. He just bought gold. The moment the war happened, he just bought gold. And yeah, it's actually typically traded on the H4 time frame. It helps a lot with your psychology. Your fundamentals must be to the T, must be on point. You must understand every single thing that is going on before you decide to do swing trading. It might take some time to understand what is going on. Firstly, you understand the CPI, PPI. You got to understand the NFP data and the overall long-term movements. That's what you are looking for when you are doing swing trading. So there are actually a few, very, very few trades that you actually take. There are more gains compared to losses. Why lesser losses? Because your stop loss is very, very wide on the H4 chart. How many times a day can a H4, like a stop loss, like let's say Chart moves like that. This is on the H4 time frame. So let's say your entry is here. How often can your stop loss be hit when this entire area is about 40 to 100 pips stop loss? It's very, very hard for the market to move towards that direction easily. That's why your fundamentals must be right. Technical analysis also must be on point. So definitely it's more hands-off approach. More of the time you can relax, only looking for good, very solid setups, then you enter. Also, once again, I got to reiterate, you must always use stop loss. Where is it? You must always use stop loss. It's very, very important. Stop loss is to prevent you from losing more money and pumping in more money, to prevent the unrealized loss from blowing up your account. So also have proper risk management. So if you're swinging, you can actually risk maybe 1 to 3% of your account for that swing trade, and take profit levels. Why are take profit levels very, very important? Because it's to prevent yourself from being greedy. It's just that, and it helps a lot with your psychology. Why it helps with your psychology? Because if you do not have a take profit target, you'll get greedy and you start be thinking, wow, the price can continue moving up. I can make more money. My pocket will be fatter. I can make lots and lots of money. But what happens when it actually hits your potential take profit target, but price then decides to reverse in your favor and hits your break even? It would definitely affect your psychology a lot. And you will start to revenge trade. It helps. You start to revenge trade, wanting to make back that money that you potentially could have gotten. So please set your take profit levels and stop loss. You must always set risking 1 to 3% per trade. So for me personally, I actually only risk 1% or less on my account. So recently, starting this year, in fact, starting last December until now, I actually started to risk, for me personally, 0.1 to 0.2% per trade when I'm scalping. So I've just started a prop trading funded trader account challenge. So I just started this year, and I just entered my first trade yesterday. So I was up 0.27% on my funded trader accounts. So I actually need 8% in order to pass this challenge. So I'll update you guys along the way every single webinar that I'll be doing. So hopefully, I hit that 8% take profit target. So it's actually quite high. I'm not going to lie, it's quite high, 8%. But I'll see how it goes, 8%, pass it. Hopefully can inspire you guys to take on the challenge also, improve your trading strategy. And a prop trading challenge actually makes you have much more discipline, because they have a definite closeout at 12% of the entire account. So once you hit 12%, negative 12% of your account, you lose the challenge, you fail the challenge. So it definitely will make you trade properly, like more proper, more disciplined to wait for better trade setups. Okay, this is a swing trading. So same thing, swing trading, just very, very simple, just showing you how to draw resistance. Support, previous swing low, support. It's just very, very simple ones. Simple analysis, support and resistance. Okay, how much time do you need for swing trading? So day and swing trading are very, very different when you approach the market. So you guys can see day trading require more time, watch price action, yada, find more opportunities. So yes, definitely. For me, I only focus on the New York and the London session. So per day, I'm looking at the chart for about 6 hours a day only. The rest of the day, I got my own things to do. I'm not a slave to the chart. I'm not greedy. I'm not forcing a setup. If there's a setup that happens in the Asian market, I'll leave it as that. So not taking a trade when it is not time for trading requires a lot of discipline, because it's you yourself If you only say you trade during the New York and London session, but in the Asian session, you enter a trade and it hits stop loss, there's no one else to blame except yourself, because it was your own finger and your own decision with a lack of discipline that caused you to enter the trade. So it's your own hand. You actually clicked onto the mouse, you just entered the trade. So it requires a lot of self-discipline. So swing trading is very, very different. Why? It does not care whether you are on the London session, New York session, or the Asian session. As long as the fundamentals are right. Fundamentals are right in the long run. Any timing you can enter a trade, because fundamental is a very, very strong canon in trading. So if you are very, very good at fundamentals, you combine it together with technicals. Take it as technicals give you their confirmation, but fundamentals is the fundamental canon. So if you are looking bullish, the fundamental news all point for, let's say, euro dollar to continue very, very strongly bullish in the long run over a few days. You can find a very, very simple support and demand on the H4 or H1 chart before you enter a trade. Boom, boom, and all of a sudden, the fundamental canon is in place. Price starts to shoot very, very strongly towards your area. So you definitely need to check your trade once in a while, maybe every 1 hour to 4 hours, just check once, or maybe every 4 hours, check once, depending on the time frame that you are actually using. Okay, so Trung actually said for him, the toughest factor for long-term trading to compensate for the higher risk and risk to reward trading is the brokerage overnight fee. So that's the reason why you definitely have to have good fundamental analysis. So I just come back and show you just a very, very simple example here. So you can actually see there's a support, there's a resistance right here. You notice that price bounce off once, twice, and the third time off this area. So potentially you can look for price to hit back up. You can maybe sell into the area the fourth time, stop loss above, and you aim for the next support area. So this entire trade can possibly be a 200 pip trade. So you are basically just trading from one area to another area. It's like price action is like a ping pong. You're pinging-ponging from one area to another, one wall to another wall. Let's take it as that. So yeah, definitely you will get the overnight fee, but that also depends where do you enter your trade. If you enter your trade right here, you're trying to take a sell to the downside, hoping to go down, but price continues to go up over a few days, hitting before you slowly go down. And this entire reason is why you are getting the overnight fee. Your entry wasn't that good. You entered very, very early. Did not wait for a retest, a retracement, causing you to get more fees. You're paying more fees because the trade runs over a longer period of time, more days that you are holding the trade, more days that you are even managing the trade. So yeah, you still got to be very, very solid in your technicals. Patience, because you're on a H4 chart. It doesn't seem like it's moving much, but please have patience. Just wait for the right setup to happen. Okay, so also I actually do take a look at the Forex Factory. So I'll show you guys how do I trade. Forex Factory. So I actually look a lot at the Forex Factory. I just have a quick look. You know, sentiment for the day is very, very strong for day traders. So let's say euro dollar. Okay, none. Okay, never mind. Okay, let's say euro. We have the French industrial production 2%, which is way better than previous, minus 2.5%, expected 0.9%, but the actual is 2%. So this is very, very bullish for the euro dollar. The news came out at 3:45 p.m. just now, so it's about roughly 2 hours, less than 2 hours ago, 1 hour 45 minutes ago. So yeah, it's actually pretty bullish. So I'm actually looking to buy euro dollar. It's supporting my technical analysis. It's best for technical analysis. Looking for a buy. Everything is in place. Your chart has been drawn nicely. Fundamental in place also. So for me, I'm looking to buy euro dollar. USD, all right, doesn't matter. CAD, okay, so later this news we'll be looking at, because CAD, it can affect the US dollar. If all these these few news are very, very good, it can cause the the DXY to continue bearish, causing euro dollar to continue pushing upwards. So from now to until 6:10 p.m., I will not be trading. I'll let the high impact news to take effect onto the market. Whatever happens, let it do its thing. So maybe during the New York session later on, 7:30 p.m. New York time, 7:30 a.m. New York time, I will start looking at the chart after all these news events has passed. So 1 to 2 hours before a heavy impact news happen. Okay, Chung, you actually asked how can CAD affect the USD? Well, when a major currency releases a very high impact news, so let's say Canadian dollar, they release some kind of article, the event, whatever things they talked about is very, very bullish for Canadian dollar, forcing the Canadian dollar to be bullish and price shooting up. The DXY will go the other way around. So you can actually do a few back tests. You can actually take a look at old data. So let me find a high impact news that doesn't concern the US dollar. Okay, CHF on Wednesday, January 4th. Let me take a look. It's either minimal impact or heavy impact. So let me take a look at this. Okay, 4th. Right, it's nice. DXY is still going down towards the directions. Okay, 4th of January. What time was the news event? It was at 3:30 p.m. 3:30 p.m. But I got to change it back to Singapore time, so I understand what's going on. 3:30 p.m. on the 4th of January. You notice right here, over here, 3:30 p.m., the CPI release. So apparently this news was somehow bullish for CHF, causing the DXY to plunge further down. 3:30 p.m. Let me draw it out. 3:30 p.m. So this was the CHF CPI release. So notice that when it was released, so I do not focus on. So if I'm being very honest with you, I do not focus on the CHF, so I do not watch the news. So I couldn't really explain to you guys why CHF is actually having bullish outlook. I only trade euro dollar, so I focus a lot on the European news, a lot on the United States dollar news. But this just a example. So apparently this news was bullish, causing the DXY to go down, and currencies like the euro dollar will go up. So yeah. Okay, no problem. You think you got it. All right. Okay, let me go back to today. Default view today. Right. Okay, so until 6:10 p.m. So for my timing, it will be, for your timing, it will be in 40 minutes time. Everyone's time is in 40 minutes time. Okay, back to the presentation. Okay, an ideal leverage to have in trading. So a lot of traders say they need a 1 to 500 leverage to trade, 1 to 1,000 leverage to trade. But the problem with that is not about the leverage. Give me a moment. How to. Okay. Okay. So I do apologize. So I actually just blocked the spammer. So there's a spammer on our YouTube. So I just blocked him, kicked him out already. So let us continue. So an ideal leverage to have for your trading, so I mentioned it's not about the leverage. So maybe 1 to 25 leverage is already enough. It's just that most traders just being very blunt and honest here, very, very blunt. So do not be offended if you guys think that you guys fit into that category. But most traders, 99% of traders do not have enough money to trade. So to enter one lot realistically, you need $100,000. So you guys start to have a $100 account, and then you guys have a 1 to 1,000 leverage. Then you are able to do a one lot, and that is very, very bad risk management. So just focus on risk management. 1 to 50 leverage is more than enough. Even 1 to 100 is more than enough leverage. Okay, there 1 to 100 or even 1 to 50. So for me personally, I'll just go towards 1 to 100 leverage, and then I'll have proper risk management, risking less than 1% of my account per trade. So do know increasing leverage, double-edged sword. Why is it that? You can increase profits because you are able to enter very, very huge lot sizes, 10 lots, even 50 lots for your trading, but you can also magnify your losses, increases your losses very, very significantly if you do not apply good risk management to your trading. Treat trading, especially swing trading, like a business. Take it as you are running a business instead of like a casino, instead of forcing out trades. You are sitting down, understanding what is going on. Starting the market, imagine that you are running a profitable business. You are trying to make money for your business. You are not here to anyhow enter a trade, anyhow forcing a setup, trying to make a quick buck. Okay, so what you can also do, you have to think about it. Any business that is run outside, they do not go to let's say a big business, they have many clients, many people that want to do a business with them. But you do not anyhow choose your clients. Some clients cause you to lose money. Some clients cause you to make money. So you slowly sit down, you slowly have an interview with them. Interview the clients, talk to them, know what is going on, whether they are good or are they bad for the business. So what you want to do, you only want to choose the good clients, the higher probability clients that can make you money. So imagine like that, imagine that way. That's the same thing goes to trading. You are finding high probability trades, very, very good setups for your business. Bad setups, bad clients, you leave them out, you do not touch them at all. Even though you might be thinking, oh, there's a 20% chance or even a 50% chance. Even 50% or 60% chance is not good enough. Even, okay, 70% to me is not good enough still. I think that when you get the feeling, when you have a trade setup, wow, it feels like in your head, technical analysis, fundamentals, all right. I think this has a solid 75% or 80%. You feel very good about the trade, then you enter. If you start to doubt yourself, start to have self-doubts, oh, maybe it can reverse the other way. The moment you start doubting yourself, do not enter the trade because you already know this is a bad setup the moment you start to doubt the entry. Okay, shall not go through this. Okay, how much capital do you need to begin with? Consider how much you can afford to lose. So a recommendation, maybe 10% of your overall net worth for risky investment. So Forex is the riskiest thing to trade. Many people do not know how to trade Forex, and most people actually lose money trading Forex and eventually quit Forex, leaving the market with a negative account balance in the long run. So only afford what you can lose. I only put 10% of my overall net worth into trading. So also do know trading requires skill. So learning trading is very, very easy. Everybody can learn trading. You sit down, have the discipline, learn trading, very, very easy to explain. But implementing trading, live trading into the markets is difficult. Because reading a book and actually implementing it is a totally different story, because you're trying to predict the next market movement. You're trying to watch and learn price action. It requires a lot of patience, emotional control, psychological control, and you must learn quickly from your mistakes. People who do not learn from their mistakes, once beaten, twice shy for them. For them, they will get beaten many times and they do not learn their mistakes. They do not understand why they lose their trade. So it's very good to have a trading journal. Trading journal for your trading. Any losses, any things that you have taken profit, write it down, record it down. Why did you enter? Did it follow what kind of technical analysis, fundamental analysis? Why did it take profit? The take profit area has this, that, everything else. Why do you set your stop loss there? Everything recorded down. I know it's very tedious. You have to write it down. Please do not type it out. Don't do this kind of Excel sheet. So I wouldn't say it's nonsense to do an Excel sheet, but you do an Excel sheet, the feeling of typing out and actually writing out your journal is very different. You guys try it out, writing out physically on a pen and paper. So even professional traders make mistakes from time to time. There's no way a professional trader doesn't lose money. It would be a lie to even say that $1 million trader doesn't lose money. They do lose money, but they know how to manage it well with very good risk management. So even if, let's say, they lose one shot, they lose $5,000, $6,000 in one single trade. But overall, you got to look on their account. It's maybe 0.5% of their account because of their good risk management. Okay, you can start with $100 capital for your trading. I do not recommend you guys to start with $100 for your trading because 1%, it's equals to $1. Am I right? Yeah, it's equals to $1. So with $1 risk management, what can you exactly do in this billion-dollar market with your measly $100? You hold that $100, let's say you walk into a casino, what can you do? You'll start to think that you want to make more money. You'll start to try to amplify your winnings, try to make $10, $20 one shot. And you start to increase your lot size, 0.5 lot, 1 lot, even just on $100 account. Please do not do so. I recommend you guys to at least use a $1,000 account. So at least 1% of your accounts is $10. So $10 you can actually do quite a bit on the market. So let's say a stop loss that is 9 pips, you can actually enter 0.1 lots. 10 pip stop loss. 10. Okay, this is 10 pip stop loss. You take the amount of money that you are risking and you divide it by the number of pips. So yeah. Also with $100 account, your trading options will be very limited. $1 you cannot risk much, you cannot do much, even 0.01 lot. In 10 pips, it will risk $1 already. So if you are doing swinging your 40 pips, you need at least $4, which is already 4% on $100. But 40 pips, 0.01 lot is only 0.4% on $1,000 account. So it's better to start off with a $1,000 account, doing it properly, risking only 1%. So your expectations of returns have to be adjusted based on the capital you invest. So do not try to aim. Let's say you have a 10K account. I think I told Trung before. So on a 10K account, when you try to make like $2,000, you need some like $1,000, $2,000 to make a living out of Forex because you have to pay your bills, pay this, pay that, want to make money. That's the dream of being a full-time Forex trader. But what is the problem with this situation? What's the problem with this scenario? Because $2,000 on a 10K account is 20% return per month. This is a very unrealistic expectation for a Forex trader. Just imagine any trader in the world, if they're able to do 20% return a month, wow. By then, why are you guys trading a 10K account? Why are you guys trading $100,000 account? You guys will be trading a multi-million-dollar fund already. Every single hedge fund will be begging for you to join them because you are able to generate 20% a month. So in 1 year, 20% is actually 240% return. So if you are able to do that, every single bank, even Goldman Sachs, all these hedge funds will be begging you to come over. So do take note that in order to have a realistic expectation that is very, very consistent, what you're looking for is consistently, month-to-month consistency. I'm actually looking for 3 to 5% per month consistently. If you are able to do that, you can easily ask, maybe ask your friends, you have a good trading track record first. Maybe you can ask your family. Everything is consistent. They can maybe invest in you just because you are consistently getting 3 to 5% a month and times 12. So it will be 36% per year. What you're looking for is consistency. So yeah, please do not aim for this kind of 20% returns. It's really, really unrealistic unless you are risking a lot for your trading. Okay, next, let us move on to one powerful day trading strategy. So we have a very, very simple one. So you can actually use a channel. So this is actually a bearish channel. Price goes down, continue moving within the channel. So when price causes a breakout, the candle closes above the bearish channel, you can actually look for immediate buy entry, stop loss below the previous low, and you aim for a take profit aim for at least a 1-to-1 risk to reward ratio. Okay, so there's also the Fibonacci lines. Why are Fibonacci lines very, very important in trading? Because Fibonacci lines, a lot of algorithms, a lot of EAs, expert advisors actually use Fibonacci lines for their trading. They have a stop loss, take profit, everything set nicely on the larger time frame using the Fibs. So take a look. Price actually tapped into the 23.6% Fibonacci line before it rejected down. So you can set take profit area 23.6%. If you're trading, let's say you enter a trade right here, buy your next take profit target should be at the next Fibonacci line. You can use that as an example. Also here, there is a liquidity run. Price cleared out the equal highs before it rejected to the downside. So I actually use the Fibonacci line a lot. So when I enter, I always look for a golden Fibonacci, 61.8% retracements for my entry. Okay, we have the moving average, moving average crossover. You guys can actually take a look at that if you guys actually use it. Looking at crossovers for your trading. So once these crossovers, you guys can actually take an early buy stop loss below, crosses up, and you look for at least a 1-to-1 risk to reward ratio. So this, you can actually check it out, TradingView, search moving average convergence divergence, or short form MACD. It's an indicator that you guys can use, can check it out, can implement to your trading. So next, support, very, very classic support and resistance levels. Just do note that all rows like this actually can act as a resistance area. So if you actually look here also we have an O high, even an O high right here, O high. Long term, it acts as a support area. So yeah, even classic support and resistance work very, very well in trading. Okay, remember at least 1-to-1 risk to reward. I'll not go through this. Okay, powerful swing trading strategy. Same thing. You guys look for a break. This is a resistance. So this was a support. Once the support gets broken through, you can look for a retest back up, and then you look for a short. You can actually sell at your entry. On the smaller time frame, you can actually find a confirmation, look for a sell, maybe your stop loss slightly above. You can actually put your stop loss all the way to the top, or once you refine it down on the larger time frame, your stop loss can potentially just be here. So you actually have a late sell once it retraces back down. So you are looking for a rejection. Price cannot break back up through the supports. That's when you look for your sell. And your take profit target towards the next support area. So once price steps into the next support area, you close your trade. Just because price can bounce off the support, you got to hold through the days or even hours and hours of potential profit that you could have taken is going back up. It can ruin your psychology. Just close at the next support or resistance levels. That's an easy way to do trading. Okay, next. Okay, done. Okay. So yeah, any questions so far? Any questions so far? Do let me know in the chat. Any questions, anything that you do not understand about day trading, swing trading, just let me know before this webinar comes to an end. We actually have another 10 minutes or so more. So yeah, just let me know. I honestly actually tried swing trading before. It does not work well for me. So please do not deviate between swing trading and day trading. So what do I mean by that? You have a day trading strategy. All of a sudden, you decide to do swing trading, and all of a sudden, swing trading does not work well for you. You start to move back to day trading. Please stick to only one strategy. For me, I do not do swing trading at all. Only sticking to scalping and day trading. All right. Okay. Okay, so last time I actually did some swing trading. I did not understand fundamentals, so I actually traded. When I first started trading, I tried to do kind of swing. I wanted to make big amounts without looking at the chart much. But the thing is, I did not understand any fundamentals. I do not understand what was going on in the market. I just entered a very, very quick buy or sell and thinking that on the 1 hour or 4 hour chart, it will go from this area to that area. When I did not understand how news could affect my trading. Okay, let me think about next. Okay, so it actually took me a while. I went through intraday trading, I went through swing trading, I went through scalping before I actually found out that scalping helped me a lot with my psychology. So I'm more of a scalper. I like to enter my trades fast and close it fast. I do not like to monitor it over 1 hour. It really screws a lot with my psychology, screws a lot with my mindset. So yeah, I actually found my sweet spot in trading. I'm a scalper. So you got to find yours too. So for Chuang and Isiramyat, so Isiramyat, he actually does swing trading. So if it's working out for you, just stick to it. Do not go to the smaller time frames and start to trade. Because for a swinger who does not know how to scalp, when he moves on to a smaller time frame, what happens? He loses out his profits faster than he can make them back by doing a swing setup. Same thing, if you are intraday, your trade runs maybe 2 to 8 hours a day. Please do not go down to scalping that actually runs for 20 minutes. It makes you can screw up your psychology. Your psychology will change a lot. You start to think, am I going to lose money fast or am I going to make money fast? You start to think about all these issues at hand. So yeah, please stick to only one single trading style, one single trading strategy. And please do not do this kind of stuff like you have your one account, one single trading account, and you do a swing and scalp at the very same time on the same account. Okay. Because if a major news event happens, and then let's say that there's slippage, your stop loss, although you set your stop loss, but price moves way below your stop loss before you close it out, what happens next? You actually can cause a margin call just because you have 2 trades open at the same time or even 3 trades open at the same time on the same account. A margin call can happen, causing you to have your account blown. You get wiped out, get kicked out of the markets, and you have to put more money back into your accounts. So Chuang asked, does swing traders base their trades on the daily chart, or is it too long? Well, it's not too long. I actually used to have a strategy. I created my own strategy by opening trades on the daily chart. So last time I used to just stick to the daily chart. Okay, last time I actually used to stick to the daily chart. So, and every time I wait until the candle closes, so let's say it's very, very bullish here, I'll just spam a buy entry. I immediately look for buy entry. Last time I used to do this. It's quite dumb. I will enter a buy entry the moment the daily candle closes. Stop loss below the previous daily candle, maybe the body of the previous daily candle, and I aim for price to continue pushing up. Maybe clearing out the next high right there. So this was a strategy that I used to use, and what happened, I actually lost a lot of money because my psychology was all over the place. So let's say if I'm looking for a short, the moment daily candle closes, I start to short, stop loss above the previous candle, the body, and I'll start to aim for the bottom. So this is what I did back then, just buying or selling solely based on the daily chart. So for swing traders, they actually focus on the monthly. They go towards the monthly first. They look at target levels where they can reach towards the monthly. So in this specific scenario, maybe for a swing trader, he can actually aim for this high right here. This high right here on the monthly, and they will mark it out. Monthly. What they'll do next, they'll move on towards the daily. So they can possibly start to move on towards the daily. So this is also a daily high that they can actually clear out. Monthly and daily high, and then next they start to look for retracement entries. They maybe start to look for support and resistance. So maybe here you can write it as your support. So a retail trader, this can be your support. And where's your resistance? Resistance, maybe just to refine it further down, you can actually push it to a best fit line. You can push it down so that the candles are more or less touching each other. Or if you want to refine it further, please do not try to have the body. Please do not try to intersect any body, like drawing through the body of this candle right here. Try to only break through the wick, WICK. So this can be your resistance for your take profit. So resistance, you can set it as monthly because it's a strong area they can look to go towards. Then maybe on your swing trading chart, you can actually move on to the 4 hours, start to look for entries. Maybe a setup that you can look for is for price to potentially head down into your support, reject the support area, and start to long to the upside. So this can be a swing trade that can possibly take a few days to happen. So this is a setup that I'm actually looking at to buy towards the top for euro dollar. All right, so this can be your previous second support area. Okay. Because price tapped here, tap nicely, tap nicely, tap nicely, rejected, and continue pushing to the upside. So in such a scenario, you can actually label it out as this is the first support, or you can actually label this out as the second support for your trading. Resistance, so this will be the first resistance on the monthly chart. So I'll just screenshot this down and I'll send it to chat. So this is just a very, very simple basic analysis. Euro USD, a possible swing buy setup on the 4 hours chart. So you can actually start to move on from here towards the 1 hour chart, looking for some possible trade entries, better confirmations. So in this scenario, I always like to look for a market structure shift where price actually break structure. Okay, not sure why it's not showing. Never mind, I'll draw a line. Market structure shift and market structure shift for a buy entry towards the upside. So yeah, any further questions before I end this webinar? I'll give you guys 1 more minute before we end this session. So until 5:56 around there on my clock before I end this session. Okay. You think overall trading strategy depends on the market trend? Well, definitely. So swing trading does not work all the time when the market is very, very choppy. Okay. Look. All right. So yeah, that is my take on swing trading versus scalping versus intraday for this session. So I hope you guys learn some more knowledge from me, hopefully to improve your trading. So yeah, hopefully see you guys in the next session. All right, see you guys soon. Take care. And hope you guys have a safe trading towards the end of the day. So in 14 minutes time, we actually have the news. Just now I mentioned. What news was it? Let me check again. We have the government Bailey, government Macklem, and government Kuroda speaking. So it's quite high impact, 6:10 p.m. So please wait until after the news release, maybe wait another 1 hour to 2 hours later before you guys continue trading. So yeah, stay safe trading and goodbye. See you guys next time. I'll be ending this session now. Hey, bye Trang, bye Isi Ramiat. Take care. Bye-bye. I'll end here.